A record turnover with pre-tax profit up 97% to 212 million Botswana Pula. For a breakdown on the numbers, we caught up with Beki, Moyo, Group CFO at BancABC.
We're very, very happy with the growth. If you look at it, you'll see that Botswana, Zambia, and Zimbabwe did extremely well. If you then look at Tanzania, we had some major issues that I'll deal with later. Mozambique actually went down slightly compared to the previous year. But in broad terms, we're very, very happy with what has happened right across the board. If you look at our balance sheet, we've actually grown 45% year on year from about 9.2 billion last year, and we've gone to 13.4 billion Pula in the current year.
That growth coming with the fact that you've been pretty aggressive when it comes to your expansion strategy across the continent. So take us through the strategy as it stands right now, because some may be questioning the fact that we need to look at these results in the context of a low base effect coming into play.
Okay, whilst that is true, what you have to look at is that traditionally we used to be a merchant bank, right? And in the merchant bank space, we controlled around about 10% of the market share in both Zimbabwe and Botswana. Now, having gone retail, you'll actually see that we've made aggressive strides in the retail space. In Zimbabwe and Botswana again, we've actually managed to hit that sweet spot, which we call the 10% mark. So if you then look at retail and wholesale, we have now managed to be able to operate round about the same levels that we've been operating in within the wholesale. So as a universal bank now, we control about 10% of market share in those two markets. In Zambia, we're traditionally very strong in the retail market. We're not so strong in the wholesale and merchant banking market, and that has actually really come up quite strongly in the year under review.
Looking at the results, your group impairments increased by 74%, and of course that comes with you increasing your exposure to the retail segment and that market specifically. Take us through how you're looking to mitigate against risk of impairments starting to filter through and have an impact negatively on your bottom line moving forward.
That's an interesting statistic. If you then really look at the numbers, you'll see that most of those impairments are not coming from the retail side. They're really coming out of Tanzania and to a lesser extent Zimbabwe. What we have seen in Zimbabwe is that the liquidity conditions in the market are very, very bad. So whilst traditionally your SMEs were the ones that were struggling, we're getting to a stage where we find even what we used to call blue chips are no longer blue anymore. We have actually seen that in that whole space where we had blue chips that were not defaulting, they are beginning to default as a consequence of the liquidity conditions in that market. So on the retail side, really the impairments have been very much under control. You will notice that in Botswana, where our retail has grown phenomenally, if you look at our net impairments, we're looking at about 1.2% in Botswana, where you'd actually ordinarily expect that because of the retail thrust that we've made, you would have seen a growth in impairments. That has not been the case.
Having said that, looking at BancABC's operations in Zambia, you've made a concerted effort in increasing your non-interest income specifically. I mean, growth on that front coming in at 224%. How are you managing that? And to what extent do you see whatever's happening there translating to your other operations?
Okay, in Zambia, you have to look at that number in the context of what has happened to net interest income. In the last year, the Zambian government, or more specifically the central bank, has come in and put pegs on interest rates that you can actually charge to your consumers. So you will find that we have now deliberately decided that whilst there are caps on the interest rate front, they're not as significant on the non-interest front. So what we're doing in order for us to be able to manage the business, we have diversified somewhat and are charging a bit more on the non-interest income, and we have reduced our interest rates quite drastically. You will actually notice that whilst the book almost doubled, net interest income in Zambia only went up by about 6%. Whereas if you then look at the non-interest income line, we have gone up by more than 200%. So it just shows you that we have actually changed tact when it comes to the Zambian